Hello everyone, I'm glad to see you here again. Let's check the sound as usual. We are waiting for several minutes for other people to come. Not to start without them. And I hope you have some questions. Please don't forget asking your questions, because we are here not only to overview the market, not only to share some analytical tips and practical and theoretical tips with you, but also to answer all your questions that you have concerning the strategies, concerning any aspects. As soon as we are broadcasting, we are answering all your questions. So you are welcome. And today we are talking about such a really important, one of the most important topic in trading that some traders neglect. It's a trading system. Many people confuse this term with a trading strategy, but trading strategy and the trading system are absolutely different things. One thing contains another thing. Let's discuss. First of all, not to let you confuse these two things. Let's start from the trading strategy. Trading strategy is a tool, is a kind of market inefficiency that we are trying to use to get some profit. It could be the breakout of the level. It could be the pullback from huge limit orders. It could be pipsing or spread grabbing, some other different kinds of strategies. But a trading system is a set of rules. Is a set of rules that should be adhered to by any trader, especially junior traders, especially the beginners. Everyone should have their own trading system. What does it include? Trading system, first of all, include trading strategy, and each trading strategy, from the breakout of levels to the smart money principles, each strategy has different styles of trading, imply different risk management, and so on. So first of all, I will try to draw something, just not to let you go bored. First of all, trading system. We are talking about trading system. Trading system include, I will use this. Okay. Just a moment. When we are talking about a trading system, first of all, it includes risk management. Risk management, it's a set of rules that help you to not only stop trading in the proper time, but to save your deposit. How to make it bigger? No, like this. Okay. First of all, risk management system. Risk management system depends on the strategy you apply. For example, let's talk about the breakout strategy. The risk management category, the risk management tab, let's say so, in this in the trading system of the breakout strategy should include, for example, 3 attempts of entry point, 0.5% of stop loss each trade, and the day draw and the draw for a one trade. For example, I can lose the maximum 0.8% from my deposit, no more than the 0.8% from deposit during one trade, and no more than 5% of deposit during the trading session. If I lost 5% of the deposit, I'm able to stop trading. I have to stop trading before because if you lost 5% of your deposit, your psychology, your mentality is accelerating in terms of you may be will be feeling some fury or angry. You are getting angry easier and easier because after each stop loss, your mind, your devil on your left shoulder says you just compensate all your previous losses through increasing your leverage. This is that trap that always ends with avalanche loss of deposit. So you should be really attentive to all the symptoms of tilt, and you should adhere to your risk management rules in your trading system. Let's summarize. First of all, it contains daily, the maximum loss for your day, let's say 5%, maximum leverage. In a breakout strategy, it could be, for example, 5x or 8x. When you are trading smart zones or pips in strategy, it could be 10 leverage. It depends on the strategy, on the trading strategy you apply. Maximum leverage, emotional control check. You should check your emotional performance before you start trading. You just should be really attentive to your mood, to your motivation during each trading session. For example, if you are coming and sitting in front of the monitor waiting for some trades, but you are really crave of getting your previous loss back, it's the real problem. You shouldn't trade in such a mood. You should wait for more stable mood, more stable another motivation, just to trade for the sake of pleasure, and they will be right mood. That's all about risk management. The next thing, strategy rules, that includes selection of the instrument. We select instrument using absolutely different tools on absolutely different principles. For example, let's take breakout strategy as well again, and here we monitor most volatile instruments, while in smart money concepts we don't need so volatile instruments. We need more historically instruments that historically work out smart zones very good, notwithstanding the volumes, the current volumes. But when we are talking about such an efficiency, market inefficiency, as the breakout of horizontal levels, it's extremely important for us to select only extra high volatile instruments with very good and very high intraday daily volume, average daily volume. So depending on the strategy, we should write down the rules of instrument selection. For example, we are talking if we are talking about the breakout strategy, we say that we should find the top 10 volatile futures instruments with the daily volume no less than 200 million. There will be two main rules, and adhering to your trading system, you will be easily able to distinguish whether you follow your rules or not. It will be like a green or red light appearing. If you're selecting the instruments, let's write down. Okay, daily volume, volatility, and clear formation. Okay, and for example, we see a really good clear formation both in on the spot graph, on the spot chart, and on the futures chart. We see really good touch to the level, but we don't see any volatility, and the daily volume is extra low. If we do not have such a strategy rules, we think that we have this in our mind, but there is a trap of our brain. Our brain tells us to just use this rule in green. Other two stay in red: volatility, low volatility, and daily volume. That's why we skip this situation. I really advise you to have your trading system, because it will help you to distinguish the right patterns, the right situations from the really bad that should be skipped. Okay, reading strategy rules, selection of the instrument. Let's make it more convenient to read. Reading strategy rules, selection of the instrument, then entry rules. You should not only properly select your instrument, but you should write down the rules for entering your trade, to write down all the conditions that you should count on, should rely on while entering the trade. And if you don't see the solid arguments for that, you skip the situation. And finally, as you can suppose, fixing rules. That's how you fix the position, how you stress out the potential. For example, it's one of the main part of this second chapter, let's say, of the trading system, because fixation is extremely important. For example, in a breakout strategy, fixing rules depends on the market stage. the recent market stage when the breakout were really greedy, I really preferred taking placing take profit already on the potential of 0.8 or maximum 1% of movement, because that was really greedy and really weak breakouts. Now the market has changed fixing rules. We change the fixing rules in our trading system. Our trading system is a dynamic system, and now I prefer closing 50% of my position after 1% breakout, and the second part I'm fixing depending on what I see inside the situation, inside the order book. Okay, that were the most important part of your trading system. And then we also should include the rules of your behavior in case you have profit and in case you have loss. It means that, for example, if we have profit, we should divide it into 3 parts. The first part we withdraw. It's extremely important because just to make you feel the importance of the earned money. The first part should be withdrawn. The second part should be left on your deposit, just to let the deposit grow. And the third part should be used as a financial pillow on the spot. As for me, that's the most optimal redistribution of your profit. In case of loss, you should write down the list of exercises that help you to stay calm and to stay fresh. I mean, in emotionally stable. It could be physical exercises or some other activities. You should find it personally. But this aspect is extremely important because you should have the instructions on any scenario that could happen during your trader's day, during your trading session. You should be ready for anything, for everything, and you should have the instruction on each scenario. And please be careful. You can form all these, write down all these rules of your trading system in Word or Excel, and I really recommend you printing it to have it in a printed version and keeping it near your working space, just to look at this and understand whether you're following the rules or not. You also should have a system of remuneration. If you follow, you're a good trader. If you don't, you're a bad trader. I really believe that trading system and ability to strictly follow your trading system is the core ability, the core skill in trading. That really, if you get used following this system, you will be awarded by the market. Believe me. And I think this lesson was quite useful for you. And if you have more questions, if you have maybe some ideas, or if you really want to talk about this in more details, please write it in the comments below, And that's all for today. Thank you for your attention.